Hello again, dear viewers. Today is Friday, December 2nd, 2022, and you are tuned in to my weekly stock market report for MasterChartsTrading.com. Please don't forget to hit the like button, subscribe to the channel, and share this video with others. The likes are very important to this channel because this is how YouTube algorithms work. The more likes you get, the more people will see this video. Today we'll look at stocks as they surge above November highs. Dow Jones actually approaches all-time highs. So how bad can things be if all-time highs are very close? There is a small bullish divergence, breadth divergence for stocks compared to their market breadth. I'll show you what I mean. This is good news for stocks. Precious metals are taking advantage of weakness for the dollar and have surged, especially silver. We'll cover that. I don't normally cover silver. And if you are a subscriber, then stay tuned. We're going to cover all of these various stocks: natural gas, biotech, Spain, Thailand, Costco, Johnson & Johnson, United Airlines, Wynn Resorts, etc. There's many different stocks. Bluebird Bio. So stay tuned if you are a subscriber. If you're not a subscriber, consider signing up by going to the description of the video in the in the comments section. All right, let's get started. So first of all, on this chart you can see this green, blue, red, and yellow lines. These are my proprietary trading indicators. You can find out more about them again in the description of the video. I use them pretty much exclusively to trade and also to determine whether I should be even thinking about buying a security or thinking about selling it or doing nothing. So on this chart we have S&P 500 mini futures, and symbol on tradingview.com, this is a tradingview.com interface, is ES1 exclamation point. These are continuous futures and very convenient. Basically just very easy to read. So on this chart we see that up until very recently we were in a downtrend because we were making new lows. In fact, this is a 52-week low right here on Thursday, 13th of October. And then we also formed what's called a hammer candlestick. It literally looks like a hammer, a handle and the head of a hammer, and then surged, and we surged significantly, and then finally we hit this red support resistance line. So in a downtrend, when we hit the red support resistance line, we want to sell short there. In fact, you can see two downward facing arrows there. I put them there. These are actual signals that we can use to sell short. However, we did not take them. Notice they're purple versus these previous ones here in September and late August, which are red. These guys we actually took, and whoever took them, really did great, basically. Now, we didn't take them for multiple reasons. I just the nature of this rally made me think that we're not yet done. And so last week I talked about what's called a bear trap. Notice right here. So bear traps happen when we get a signal to sell short in a downtrend, and then the stock turns around and surges. This is what's happening right now. In fact, on this Wednesday we had a big green candlestick. This green candlestick also carried us above this high from Tuesday, November 15th. And now we have closed above that level, and we're holding on to it. In fact, today was a pretty scary day because we dropped initially. I'm going to show it to you on a short-term chart. You can see what I mean there. Here's a 5-minute chart of today's action. There is the jobs report release in the morning here, and it's just, look at the size of this candle. It collapsed. But then throughout the day we basically continued to rise. This is a 5-minute chart, so we got to the bullish levels on the 5-minute chart and then continued higher from those levels. So you can use my indicators also to trade intraday. just make sure you're using continuous securities such as forex, futures, etc., or cryptos. So as of right this instant, I had a subscriber who asked me, maybe I think it was just like a few days ago, maybe 4 or 5 days ago. They said, okay, so what should we be doing? It's very confusing time. And I replied, yes, it is indeed a confusing, and I noticed it's a treacherous time. However, if somebody held a gun to my head and said, okay, Alex, I want you to pick a side. You either buy or sell. In other words, you're either buy or short. So right this instant, I would rather be either out completely of the market or long. I would rather be long, because there is just this potential for a continuation to the upside and bullish levels, meaning that if we close above this blue support resistance line, which is currently at 4318, I think if we close above those levels, especially on the weekly chart, so we can look on the weekly chart. Here's a weekly chart of the S&P 500. If you're trading using my indicators, you need to change the length to 52. Notice where I'm hovering if you're doing weekly charts. So weekly meaning each candlestick is 1 week's worth of activity where I'm hovering. So the weekly chart, if we close above this level 4318, which is not that far, notice how far we are. We're just like 6% away from bullish levels. That's not far. If we close above that level, I think we'll start making new highs. In fact, we'll make new all-time highs, I think. This is a very good possibility of that. So let's see what happens. Again, if somebody held a gun to my head right this instant and said, do you want to buy or sell? I would say I want to be buying or doing nothing. So let's see what happens when we get to, if or when we get to 4318, and there's a good chance of that as well. This is for my subscribers, but I'll share it as well. So I did another. This is a 4-hour chart. Okay, notice what the symbol I'm using is SPX 500 USD. This is a contract for difference for the S&P 500. So it's basically live futures for free. Okay, so you can use this symbol on TradingView.com to get free live futures. You don't need to buy any data. So here we're looking at a 4-hour chart. So 4-hour chart, meaning that each candlestick is 4 hours worth of activity. So here on November 28th, so on Monday of this week, I said, okay, it looks like I'm going to do another projection. And this is a yellow projection in yellow. I thought we're going to drop into early December and then continue higher. So we actually hit my target already where I thought we were going to go as far as up, but we didn't even go down. So this sort of shows me that there is potential. People want to be buying stocks somehow. This is good news basically for stock bulls. So that's why the reason why I'm so more optimistic now than I was just a few weeks ago. I'm pretty optimistic also because of the way Dow Jones is acting. This is Dow Jones Industrial Average. So Dow Jones Industrial Average broke out into the bull market right around here on November 21st or so. In other words, all it did is it closed above this blue support resistance line, and this is all I really need to know, that now we're in a bull market. Previously, notice here in August of this year, we were rejected there. In other words, stock price, the Dow Jones Industrial Average price came up to this level, but didn't close above it. It's really kind of funny the way it did, and then collapsed to new lows. This time is different, because this is the first time we actually closed above this level. We can look back. This is the first time we closed above this blue line since right there. February of this year. So right before the Russian invasion of Ukraine. Okay, so what are the implications for the world wide events? Last week I suggested that popularity of Russian dictator Putin is dropping and stock market is rising. That is, so far I'm seeing that sort of a correlation, again, not a causation. Looking at NASDAQ, it is still dragging its feet. However, it is doing pretty much the same thing as far as the shape of the curve. You know, we had a surge right there on November 10th, and another surge right there a couple of days ago, November 30th. So the shape of the curve is identical to S&P 500, but we're lagging behind it. Whereas Dow Jones is already breaking above this blue line, S&P is above the red line, NASDAQ is barely above this yellow line. Okay, so what does that mean? Not sure. I'm hearing about layoffs in the tech sector, so maybe layoffs in the tech sector will be interpreted as a positive sign for stock investors, and then the stocks will continue higher. Russell 2000. So notice here I have two projections. I did a couple of projections here. I'm going to turn them off for a second. So right now the prices, we just closed above this red support resistance line. And I wanted to show you again projection into the future. You can see my indicators projected into the future, and this is the lowest point will come in January 17th of this year. So last year I said this is like a final argument of kings. Final argument of kings is a cannon or a gun. It was French kings who had that saying written on their cannons. So in our times, final argument of kings would be nuclear weapons. So will Putin decide to use nuclear weapon? I think things will come to a head in January, because of I'm following the events on the ground very closely right now with the war in Ukraine. I think they're about to start a second wave of mobilization, and we have to understand we're talking about hundreds of thousands of soldiers that they're mobilizing to basically die in the fields of Ukraine. So it's not like in the Western societies where when we have a small amount of losses, and we're talking about thousands of people dying per day. So what I did here is I did two projections. So one projection is in purple, where we get to that level in January and just break out and continue higher. So this is a very optimistic projection, meaning that something happens. I think Putin is the Russian dictator is basically the roadblock to stock markets success right now. And what could be very scary is that something happens here. For example, he really freaks out and actually orders a nuclear strike somewhere in the world. We don't know where, maybe. And then the opposite happens. We actually see a collapse of the stock market. So a pessimistic scenario. We should be looking out into January, which is very soon. Okay, I wanted to show a couple of, or rather one of my favorite indicators as far as market breadth is concerned. So this is on StockCharts.com. You can type in the symbol $NYUD. So when you type it in, make sure to change the type where I'm hovering to cumulative. If you leave it as candlesticks, it will be it's a meaningless mess. But if you change it to cumulative, you will get some sort of interesting results. So advances minus declines volume. So every day there is a bunch of stocks that are going higher, a bunch of stocks that are going lower on New York Stock Exchange. and we take the decliners, we subtract them from the advances, and we get a number every day. And then we take that number and we add it to the yesterday's number, and we construct this line where I'm hovering right now, this top line. The one at the bottom is S&P 500 index, S&P 500. So here's what I wanted to show you. Today, on Friday, we closed. This number doesn't actually mean anything. It's just a relative number. So we closed at minus 6093. Previous intermediate high right there was minus 6572 on 6th of September. Now, this is lower than today's number, so market breadth actually made a higher high, meaning that the stock advance is broad. There's more advancers than decliners. This is good news. We want to have broad participation in the stock market advance. However, notice that below here, S&P 500 has not yet made a new high above the 6th of September or 12th of September levels. So this is what's called a bullish divergence, because market breadth has already made a higher high relative to the previous high. However, S&P 500 has not. So if we break above, again, I'm going to look at S&P 500 again. This is the 6th of September or the 12th of September, week of 12th September high. We haven't yet made a higher high above it, but if we do break above it, we're so close to the bullish level. So this is again another reason why I think we can break into a bull market. Now we have a bullish divergence. This is good news. Switching gears, we're looking right now at dollar index DXY. So I started saying that it was topping here back in September. There were multiple bearish candles, one on 28th of September, another one on 13th of October, another one on 21st of October, another big bearish candle on the 4th of November, and then several more. And we dropped. So notice what happened. We dropped below this blue support resistance line on 11th of November, kind of traded sideways, and then popped above it again on 21st of November. So my system says, okay, at this point on 21st of November, we should have been buying. However, I didn't like the way things were happening, the action, and I said this could be a bull trap, meaning again, so that if we buy here with the hope of it going to new records, it turns around on us and continues lower. Exactly this is what's happening. In fact, today we made a lower low. So most likely this is indeed a bull trap. I will know for sure if we get to this red line at 102.165, which would imply a bear market for the dollar. And now this is indeed a very important momentous occasion, because this is a weekly chart. Notice that we've been in a bull market for the dollar since July of 2021, where I'm hovering. There's the breakout above the blue support resistance line, and it never stopped really. So now it looks like we're seriously turning around, and we're super close to the bearish levels, meaning that at that point we will expect lower lows and lower highs to continue. So another good indication is when you're trading dollar, you want to look at gold and vice versa. So this is gold XAU divided by USD. Why is it important? So once again, if the US dollar part of this equation, lower part of this fraction, if it gets smaller, that means the upper part of this equation, gold, will continue higher. This is exactly what's happening. Dollar is weakening, gold is rising. So very just good looking action here. Notice what happened. We touched this red support resistance line right there on 2 days, on 15th of November, 16th of November, bounced off of it, got to the previous highs, touched that, and then surged again. So notice again, so what happened yesterday on the 1st of December, we closed above this red line. Today we tried to get down below it. So far we have failed. So this is a good news for gold bulls. Most likely we will see a continuation higher for gold. In fact, looking at silver, this is silver XAG USD. This one, even more bigger amplitude moves, but notice the last 3 days just very strong move higher, and we're basically at the bullish levels. Bullish levels are at 23.42 per ounce. So right there, we're very close to new bull market for silver. I think it's reasonable to expect the same for gold. I think dollar is likely done and will continue lower. Alright, that's it for this week's recap. If you have not yet signed up, head over to the link in the description. Go to MasterChartsTrading.com, click on sign up for one of the products. I have two products, trading indicators and newsletters, and two packages for them. Trading indicators are these lines on the chart. You can trade pretty much anything you like on most time frames. The newsletters, I send out daily newsletter. We cover various common stocks, ETFs, cryptocurrencies, gold. Also, we look at speculative stocks, so you get that as well. The best deal is to get the both trading indicators and the newsletters, $59.95 per month. I think it's a great deal, so sign up today. Again, if you have any questions, please let me know. Thank you for watching. Have another great trading week. Bye bye.